Welcome back to Regulatory Powers. Today we are going to discuss about how the Reserve Bank of India deals with foreign exchange and enforces the monetary policy through market operations. The Reserve Bank of India is the custodian of foreign exchange reserves as per the Reserve Bank of India Act 1934. With the increasing volatility of exchange and interest rates in the global market, it is the task of the RBI to preserve the value of reserves and obtaining reasonable returns. The RBI's policy for foreign exchange reserve management is based on three pillars: safety, liquidity, and returns. Given that the primary focus of the RBI is to maintain market confidence in monetary exchange rate policies, intervening to stabilize forex markets, minimizing external vulnerability by maintaining foreign currency reserves to reduce impacts of market crises. The RBI's policy for foreign exchange reserves management is based on three pillars: safety, liquidity, and returns. The primary focus of the RBI is to maintain market confidence in monetary exchange rate policies, intervening to stabilize forex markets, minimizing external vulnerability by maintaining foreign currency reserves to reduce the impacts of market crises, and maintaining confidence of the market participants, thereby reducing costs at which exchange rate resources are available to the market participants. Foreign exchange reserves include foreign currency assets, special drawing rights held by the Government of India, and gold. Foreign currency assets are invested in quality assets, and a proportion of the investments are convertible to cash on short notice. The RBI follows accepted portfolio management principles for risk management. Next, we move on to foreign exchange management. Under the Foreign Exchange Management Act 1999, the RBI oversees the foreign exchange market in India. Foreign investment in almost all sectors is permitted with a few exceptions. Foreign institutional investors may invest in all equity securities traded in both primary and secondary markets. The total investments of foreign institutional investors must not exceed 24% of the issued and paid up capital of the company. Indian companies are also allowed to issue global depository receipts and American depository receipts to foreign investors. Indian entities can invest in an overseas joint venture or in a wholly owned subsidiary up to 400% of its net worth. They are also allowed to raise external commercial borrowings, including bank loans, buyer's credit, supplier's credit, and securitized investments. The RBI permits resident individuals to freely remit abroad up to $200,000 per financial year for permissible purposes. Currency futures trading facility is regulated jointly by the RBI and SEBI. The RBI's exchange rate policy focuses on maintaining orderly condition in the forex market. The RBI may intervene in the market by buying or selling currencies whenever necessary. Market operations are undertaken either directly or through public sector banks. Moving on to market operations. The RBI enforces its monetary policy through its operations in the money market, foreign exchange, and government securities. The RBI may buy or sell government securities for monetary management. Such operations in the secondary market may be carried out on the electronic negotiated dealing system order matching platform by placing bids or taking offers for securities. All secondary market transactions are settled through the Clearing Corporation of India Limited. The security settlement is done in SGL or CSGL accounts maintained at the central bank. Liquidity Adjustment Facility modulates liquidity conditions so that call money rates remain within the internal corridor set by the repo and reverse repo rates. LAF auctions are conducted once or twice a day to effectively modulate liquidity conditions in the market. Under the Market Stabilization Scheme, the RBI issues T-bills to absorb surplus liquidity created by the bank's forex operations. The issuances under MSS are matched by an equivalent cash balance held by the government in a separate identifiable cash account maintained and operated by the RBI. Thank you for being with us here today. Please like, share, and subscribe to our channel for more updates in the future.